how are you positioned heading into the jobs report tomorrow? And if it is softer than expected, do you think that the markets will take that as a positive signal? Or is what Fed Chair Jay Powell said still so top of mind that he's going to be aggressive? He needs to see more than one report, more than 1 month's worth of data.
Yeah, good afternoon. We're positioned pretty diversified right now. We have a mix of stocks and bonds, U.S. and non-U.S., plus precious metals, real estate, commodities, et cetera. So we've always been a diversified fund. We haven't changed that stance at all right now, given what's out there. In fact, we think in this environment, hedging your bets and having multiple avenues, better protects you from minimizing downside risk as well as avenues to profit. So that's where we're at specifically. On the jobs number tomorrow, we're long-term investors, so we're not doing anything special in terms of positioning. And I do think that regardless of what happens, the Fed, through Powell, through other Fed commentators over the last week since Jackson Hole, have been largely putting cold water on the fire with respect to reversing and cutting rates, or that this is going to be a quick fix. If the Fed holds true to their voices, and we know sometimes that's a challenge, they've changed direction before, so that's always a risk and possibly a risk to the upside for equities. But given the way they're talking right now, if they hold true to their words, this is going to be a long slog with higher rates, and I believe would likely lead to a recession in the next 12 months, if we're not already in one.
Okay, so let's talk about your picks then, how you kind of protect yourself or your portfolio in this environment. You're focusing on value that is profitable, companies with pricing power, control cost structures. Who are you looking at?
Yeah, I mean, the three that I mentioned, Lockheed Martin in the aerospace defense area, Costco wholesale, the retailer, and Chevron, the diversified energy producer. All of those have dividends. Chevron and Lockheed are trading at reasonable market multiple. Chevron's still trading below market multiple. Lockheed Martin trading roughly market multiple. Costco's a little expensive. I'd wait for a downturn. But these are stocks that, yeah, they are defensive. They should hold up on the revenue side, given the economic environment we may enter into. And still, for a long-term investor, they have dividends. They're reasonable places to put money in the stock market, which itself is a risky asset class right now, given the backdrop that may occur.